Yeah, hey everyone. I see some familiar faces, some new faces there. I guess quick show of hands, how many people here have ever heard of MakerDAO or DAI? All right, so about 90%, 80% maybe. How many of you would consider yourself um, like intermediate knowledge level or more about MakerDAO or DAI? Okay, probably about 10%. All right, cool. Well, I'm Alex, and Nate is going to speak on this tonight. Big MakerDAO fan. I think it's a really cool project. I'm not affiliated with them in any way other than I hold a small amount of Maker and DAI myself. I would like very much more of both of those. But yeah, I'm just kind of a self-appointed community member. I got a background in engineering. I've been in the open source. And yeah, so I sold my last company 3 years ago to focus 100% of my time on blockchain. So that's what I'm doing today. So we're going to talk a little bit about kind of, why do we need stablecoins? We'll talk a little bit about MakerDAO, like MakerDAO's solution compared to some other stablecoin solutions out there. Before we got started, someone mentioned Tether, which is maybe the most infamous stablecoin. So we'll dive a little deeper into different types of stablecoins and what makes DAI and Maker's project a little bit different from other stablecoins. We'll talk about some current metrics, at least current as far as a few days ago when I finished up this presentation. I'm sure the metrics have changed since then, and talk a little bit about the future of MakerDAO. So there's a small little chart here. It's kind of difficult in that monitor, but it's like Bitcoin in, I don't know, like 2012 or something. I mean, there's fractals in charts, right? So this could be 2012, it could be 2014, it could be current. The point is, are we used to currencies kind of fluctuating and having that kind of volatility? And of course the answer is no. Like, people are used to putting $1 in their wallet, and it's basically worth $1. It's not worth 80 cents by the end of the day or lunchtime. So the cool thing about the blockchain community, and there's lots of different projects in this room, people have their own reasons for joining the community. And some of those are kind of on the moral side, like crypto anarchists on one side. And then you kind of have maybe more pragmatic reasons. Business people, want things to work faster, more efficient. They want to save money. There's all sorts of different reasons why we join the community, and I think this talk is not really going to focus in on kind of either of those spectrums. It's going to kind of be focused on technically what are the benefits of DAI, and I'll try to talk about some like pros and cons. The reality is DAI is not the ultimate perfect solution, and it's what you'd call a soft peg, right? So you may be able to exchange one DAI for $1 at certain places, always for $1, and then you may go to other marketplaces and it might be like 95 cents like it was for a day last week. So yeah, we'll kind of talk through this at more kind of like a pragmatic level. So a little history on MakerDAO. It's actually like, so it's built on Ethereum, but it's actually older than Ethereum. So Rune, who's one of the founders of the project, kind of came out of another project called BitShares, and he had this idea for like a collateral-based stablecoin. We're going to dive deeper into what that is and how it works, but like these guys have been thinking about this stuff for a long time, longer than certain projects like Ethereum even existed. And so it's kind of interesting that when Ethereum was launched, they found that was a good solution for how they could maybe take this thing live. And so the Maker project goes back probably about 4 or 5 years at least. And I think like you can look on Reddit, like Rune announced like his idea on Reddit, and it was really cool to see it launch a little over a year ago. So I think one of the interesting things about MakerDAO is it really is focused on, it says here, unlocking the power of the blockchain to create economic empowerment. This is kind of a cookie cutter slide. I'll kind of break that down for you. I think when I listened to Rune talk, it probably was like 4 years ago, I heard a podcast where Rune was trying to explain MakerDAO and DAI in the Maker governance token. And I'll be honest, like, I was just trying to get my head around Bitcoin at that point, like reading Satoshi's white paper, and I'm like hearing Rune talk all this stuff. I'm like a bullshitter, but like I have no clue what he's talking about. So I kind of ignored it. I ignored it for the next probably 3 years, I want to say. And every time I heard about it, I was like, oh man, I gotta like find time to learn about that, or man, I should really pick up some Maker, token or something like that. But I guess fast forward, like I learned what Bitcoin was. It's like, okay, Bitcoin's not a scam. I learned about Ethereum. Like, okay, this is sweet. Blockchains are awesome. Completeness spoke to the computer engineer in me. So I'm like, all right, basically Ethereum's everything I love. So I'll go learn about that. And then I finally came back around to Maker. Like, it finally launched on mainnet, I think December 2017. And so like last spring, it was, bear market had kicked off. I wasn't looking at charts as much anymore. So it's like, sorry about that. So it's like, all right, let's actually dig into this thing. So, I guess to get back to my point, one of the things that stood out to me when Rune talked about Maker and the decentralized was, there's a and like these people are capable individuals, whether it's basic things like Amazon Mechanical Turk kind of tasks, or like higher level like really smart programmers or mathematicians or physicists. Like there's a lot of people with a lot of skills in this world that are really not part of the existing system. So if we have a way to connect those people with like the modern world, get a dollar, or maybe in the future the S&P 500 or derivatives of Bitcoin, that empowers those people to go do what they do, and then they can store value in the U.S. dollar instead of, if it's the Venezuelan, peso or something, or some super inflationary currency that's not really going to be a good store of value. And so there's cool things we can do to make it a better place. Capacity and productivity locked in those individuals, like we can like connect to the rest of the banked world too. Like that's a big economy, and so I think a really important part of the Maker project, because it's fit into the current modern systems, that all of a sudden like we can start doing things with. And I know the Detroit Blockchain Center talks a lot about doing that for the city of Detroit, right? So I think this probably fits in well with the mission of the Blockchain Center. So I have people ask me a lot actually what a stable coin is. I actually, I'm working with the traditional financial industry a lot these days, because they have a lot of questions too, ironically. And like just earlier today, someone asked me about what a stable coin was. And I try to explain, like, if you understand what a blockchain is, which a lot of people don't, but let's just like fast forward. A lot of people here, most of you, I think everyone here understands what a blockchain is. If you don't, talk about that after the presentation. A lot of people here that could probably answer that even better than I could. But so like it's really, you can transfer, clear, and settle really quickly. Hours or seconds. And you can't really do that with dollars very well. Like, I mean, I could ask one of you for $1, right, and you can give it to me. We clear and settle that really quickly. But like we live in an electronic world, right? So it's very difficult to do that over the internet, with some random person you met in some Discord or Slack. I'm not interested, by the way. But if you wanted to, you could do it really quickly. And so why can't you do that for dollars? I mean, I had a client pay an invoice the other day, and it's like, okay, I deposited my business account. Now I'm waiting 2 days for it to get to my personal account. And then I'm going to have to wait, probably another week to get it onto Coinbase Pro to convert it to DAI or some other cryptocurrency. Things are really fast. Stablecoin, like, do that with US dollars, right? Like, people just like open up their Coinbase wallet or whatever they use quickly. I think most of you are familiar enough with stablecoins where I won't belabor that point. So this meetup, we're talking about DAI. An important thing to understand, though, is that like DAI is just the start for Maker. Like DAI is currently, it's a soft peg to the US dollar. The idea of Maker, though, is we don't just have like USD DAI, we have Euro DAI, we have Yen DAI. There's no reason why we can't have different crypto assets pegged to different things. And no, there's not. No. Last I heard, though, we could by the end of the year. I talk about it a little later in the presentation. I don't think we'll see it this year, but we could see it as soon as next year. And then really the ultimate goal, I think, for probably in Rune's head, and I haven't talked to Rune about this, it's just like my impression of when he talks about this stuff is, we could have some sort of kind of global store of value, if you will, right, that has a basket of currencies, right? So we've got euros, we've got dollars, maybe we have Bitcoin. We could have all sorts of different assets that are, kind of pegged to a more global currency. And so the interesting thing is, if you can create a stable token that's tracking the US dollar, you could do it with the S&P 500, or you could do it with Apple, or you can do it with all sorts of different real-world things that aren't on the blockchain. So I guess just kind of going through this list. So DAI is focused on soft peg the US dollar. The difference between a hard peg and a soft peg is if it's a hard peg, basically you're guaranteeing it's always a 1-to-1 ratio. There is no minor difference. The issue with that is you've got countries like, I think, Argentina and a number of other countries that have attempted that in the past, and hard pegs don't really end up very well. And you end up with, once that peg breaks, it's very ugly, and hard pegs are really, really difficult to do in something like this. So soft peg essentially means the system's built with different incentives to focus DAI on maintaining that dollar value. The reality is if you look at that token at any point in time, it could be 99 cents. It could be $1 and 1 cent. If you go on Coinbase versus a decentralized exchange, you could find anything in between there. And like I mentioned, because of the supply, the increased supply of DAI recently, there's about 93 million DAI in existence right now. There's literally was an issue last week where it's kind of been drifting away from $1 to like 98 cents. And in the short term, that's okay. Like the system's designed for that. But you start drifting towards 96 cents, and I think, was it Daniel, is it? Mentioned Tether earlier. I think Tether last fall fell to like 80 cents and like for a day or something like that. So it's really, really scary when you start drifting too far from that peg. So the cool thing is that Maker has a bunch of different mechanisms to try to influence that supply and demand. We'll talk a little bit more about that moving forward. But I guess I'll just kind of pause for a second. Any questions about anything I've gone over so far? Oh, yeah. So, yeah, perfect. I'll say really quick that you can use DAI today on Ethereum as well as side chains of Ethereum. So there's a really popular one, well, really popular as in like in the last 4, 5, 6 weeks, called POA created a chain called XDAI, which we used at the East Denver hackathon to buy tacos at street vendor food trucks. So that was really cool. But yeah, so it's only available on Ethereum right now, but if you use an exchange like Coinbase or various decentralized exchanges out there. You can find DAI in other places too. So we'll dig a little bit deeper into how do you know that a DAI is going to be worth $1? And so there's something called a CDP, or collateralized deposition, that the MakerDAO smart contracts enable people to create. So if you have a bunch of Ether you're holding because you believe the price of Ether is going to go up in the future, you could essentially lock that Ether up into the Maker system, and then say you had locked up like $300 worth of Ether. So what would that be, like 2 Ether or something? You could take out essentially a loan for like $100 worth of DAI. So you would actually mint that DAI by locking that collateral. One of the key parts of CDPs, though, is that if you have to maintain at least 150% collateral. So if you take out $1, you need to have at least $1.50 worth of Ether locked in there. If you fall below 150%, the system will automatically liquidate that debt, sell your collateral on the open market automatically, receive DAI as payment for that, and then pay off your debt, and then return the 13% fee. So you don't want to get liquidated. It is an automatic mechanism, though. So like if the price of Ether were to have like a flash crash, there could be danger of liquidation, and it's happened to people sometimes for millions of dollars worth of DAI. Yeah. Can you add more collateral? Absolutely, yes. So if you're to lock up $300 worth of collateral, in reality you could take out $150 worth of DAI, but that means if the price of Ether fell a penny, like you'd be automatically, you basically default automatically. So most people would keep at least 200 to 300% worth of collateral, right? And so there's some opportunity cost to that. So if you're going to lock up like 300% collateral, like there may be better things you could do with that collateral. And there are other interesting systems out there to do things today. Yeah, David.
What's the oracle?
Yeah, so I think there's something like 20 price oracles that pull from different exchanges out there, and they report in something like every 5 or 10 minutes, and they're kind of staggered. So if you have outliers, so if you have some oracles that don't agree with the others, they're essentially thrown out as outliers. And what you'll find is you can actually go to the website called, it's Maker Tools, so mkr.tools. You can actually see each oracle report in essentially real time, right? So what's interesting is you'll see like when the price is falling, there are CDPs out there that like to stay really risky, like 155% collateralization ratio. There's a famous CDP called number 3228. Like we literally a few months ago were watching this guy as the price was falling back down towards $100. This guy was like at 102, 101, 100. Like he was literally pulling collateral out so he could sell the guy to pay off his loan, like in real time. We're like watching it, and so he actually, the price fell below his liquidation price, but only of those oracles had updated to the new price, and so it was, the system takes an average of those different price oracles, and so he literally was like 2 cents too low, but he like paid it off before like 2 more oracles updated, and he had like $3 million at risk. Like we were watching this in real time in chat rooms and on Twitter and stuff. Like it was really crazy. But yeah, so to go back to your, yeah, right, exactly. So to go back to your question, like that's how the oracles work, is that you can go to GitHub and download the code for how the oracles work, and if you wanted to
Are those oracles forced to participate in markets for the DAI? Because it would seem like that's really fair to just pull all these prices to 20 new places if they're not markets that can also sell the collateral.
I think they're pulling them from like Coinbase and Kraken, and then I think some of the decentralized exchanges. Yeah, I think the idea is to pull in enough different ether prices to try to get an average what's the market price of ether.
Those aren't.
It's a derivative of what you're creating with a seed.
My point is when Ethereum's at 300 USD 185, Ethereum drops, right? It's going to do a collateral call based on these oracles. So what market is it going to sell the collateral? Because that should be the same market that's reporting these prices. Because if it's not, then it's completely misaligned. I mean, we have that bar. I mean, I'll give you an example. We use coin market cap pricing
Right.
to show people what pricing our
Right.
assets are. And then when they went to go buy them, they were completely different prices. Those weren't the markets they're buying them from.
Yeah, I think it's important to realize that it's not like the Maker smart contracts aren't proactively selling them. It's making them available for sale so that anyone can come along and run a piece of code called a keeper to actually take advantage of that collateral that's for sale. So it requires someone outside to actually decide they want to purchase it at that price, and it's sold.
So it's like a spot price, and they have to agree.
Um,
The counterparty has to agree with this random spot price, or this.
Yeah, they have to decide they want to buy it, and it's sold at a 3% discount of whatever that market price
Why?
is.
What is that? Yeah. How do they get that 3%?
That's the incentive for people to actually monitor these different CDPs to get the collateral.
Anyone can go on the MakerDAO app and they have like a section like there's a ether one, and as long as like everyone can keep it.
How many keepers?
I mean, anyone can use it.
Anyone can.
Anyone can like do as long as you can go and listen to the network report. And like you said, that 3% is like incentive so that like people do get.
Yeah, that seems pretty like I've never heard of that in my account. I use Diamond, but I don't know how well that works. Yeah.
Yeah. There's a lot of people I think that have been downloading the keepers over the last 6 months.
Clarifying question, is what a keeper doing offering up DAI to be destroyed to cancel the collateralized position when the call happens? Because that's how the bid assets work in like the BitShares. But you and the team you realize BitShares was never going to get any liquidity and ported that entire system to
Not
Maker and DAO essentially.
Not quite. There are differences. I'm not a BitShare expert, but it's not a copy of BitShares.
I'm curious if the keepers are returning DAO or DAI and tracking the supply.
Yes.
That,
Yeah. So
Buy the collateral is that.
Yep.
when a CDP gets liquidated, it destroys DAI.
So that's super interesting. That mechanism happens automatically because the difference with BitShares is a CFD, contract for difference.
Yeah, it's different
This
than that.
is slightly different.
Yep.
It's a collateralized debt position.
Yep.
And thanks.
Yeah, this is not.
I know there's a difference.
Yep.
What is it?
Yeah, so we're going to talk about the different stablecoins in a few slides, but yeah, I would call that more like an algorithmic stablecoin, and this is crypto collateralized. It's not
You don't
algorithmic.
consider DAI an algo coin?
No. No.
I would have assumed it was.
Yeah, so you guys are definitely more advanced. So we're going to talk a little bit about some of the different types in a few slides here. So just to kind of finish up the mechanics, not to focus just on CDP. The reality is you don't have to open up a CDP to use DAI. Like anyone could use DAI, right? Like if you just don't want exposure to crypto, you can just keep your money in DAI. But for anyone that's new to this and who's trying to get your brain around it still, like think about it like a home equity loan, right? So you've got this asset, it's your house. You want to take out a $20,000 loan to whatever, finish your basement or do home improvement stuff. You basically put your house up as collateral, right? So the difference is the mortgage company can't liquidate your house as fast as the CDP can get liquidated. So that might, if you maybe, I don't know. I hear that takes a long time. But yeah, so really quick, just finish this up. If you're trying to get your head around how CDP works, I just say like think about maybe like a home equity loan. So yeah, Rob. Well,
I would say still super experimental and careful to say there's no risk to hold it down because it's a peg rate.
Oh, I didn't say there's no risk, but
Okay. I just wanted to clarify
Yeah.
because
there's always risk.
there's like it's stable.
Yeah.
It's become unstable.
Yeah.
That's the black spot risk. You didn't want exposure to crypto.
Yeah. No.
You have a
Yeah.
lot of exposure.
If you don't
So
exposure
have
to.
exposure to the derivatives thing, essentially.
Yeah.
Dream fails, you fail. But yeah, just to clarify.
Yeah.
I think it's a good presentation. There is.
Yeah. Yeah. No. And
still an element of risk there.
I agree. There is, and I think there's interesting ways that Maker tries to mitigate that, and we'll talk about that a little later. So we kind of jumped into talking about liquidations a little bit. I'll just kind of read off this slide really quick. CDP is automatically margin called if the collateral falls too low. We talked about that. Currently with ETH, you have to have at least 150% collateralization ratio. Collateral sold off by the smart contract to anyone who will buy it. So we went a little deeper into that. The smart contract is simply making that collateral available to people that want to actually buy it. And if for example, you're over collateralized, say 150% right, so it's sold off, 100% of that pays off your DAI debt, you could have some left over, right? So that would be returned to your CDP and available for use.
What was the interest rate that you said? 3.5%.
Yeah, so right now there's a stability fee of 3.5%. That's variable though. A week ago it was 1.5%. No, so we'll talk about the governance token. It's something that, so anyone that holds, there's 1 million Maker tokens. Anyone that holds that Maker token can vote for changing that fee. And so there was a vote a week ago. There was a proposal to raise it 2%, and enough Maker holders voted for a change to the system that it went into effect. Yeah.
Yeah, I just wanted to point out the advantages to CDP over, say, a loan with if you think about having to liquidate your Ether or another cryptocurrency, you're going to end up paying, capital gains tax in the US of being like 10 to 40%, depending on how long you've held your cryptocurrency for. So I think that's a huge advantage of being able to just transfer your currency in that way without having to pull it out.
Sure. Yeah. This is not legal or financial advice. A lot of, or I would say some people would say there's no taxable like profit or loss by locking up your collateral and taking out a loan. Some people say there is, so I would leave that to you and your accountants. But yeah, I would probably tend to agree with Elizabeth on that. So some metrics. So right now there's 92. I think I checked before I came out. Just under $93 million worth of DAI has been created. So it was launched about 15 months ago on mainnet with basically no DAI in existence. So there's a little over, I think, almost 2.1 million worth of Ether locked in Maker right now, and people have created about 92, 93 million worth of DAI. The ETH that's locked up when I did the slide was worth $286 million, and a little over 17,500 accounts have DAI in them. So this kind of gives you an idea of the scale. We talked about Tether earlier, right? I think there's probably about 2 billion worth of Tether in existence, and then there's some other stable coins that are a little different, which we're going to dive into here pretty quickly. But like GUSD and USDC and Paxos, collectively, I think there's about, taking Tether out of it, there's about $750, $800 million worth of stable coins in existence, and so DAI is about 100 million of that, so it kind of gives you an idea of, like, on the scale of things, it's probably about 4th or 5th largest stable coin. Yeah, I think probably mean and median are important to take into account there. All right, cool. So we'll talk a little bit about different stablecoins since we're already there, right? So there's fiat collateralized. So we've talked about Tether, which turns out this morning they're saying actually it's not backed dollar for dollar. So if that's news to you and you've got Tether, it shouldn't be, because there's been a lot of controversy.
Well, they actually were trying to have other
Yeah. Yeah.
That's what they said in the statement.
Yep.
It wasn't that they were going to go on fractional reserve. They just wanted to hold other assets with that cash.
Yeah, and the reality is when Tether fell to the 80, 85 cents mark for a brief period last fall, I bet you I know who was buying that up if it wasn't fully collateralized. It was Tether, right? So they bought it at 85 cents. It makes it a lot easier to, reduce that fractional reserve if that's what you're running, which I'm not saying they were. No one knows. But anyways, yeah, like Tether's fine, whatever. I think I probably had some Tether back in the day, like when I was using Kraken and BTCE or whatever. Then there's crypto collateralized. So that's what we've been talking about with Maker. Every DAI is backed by Ether. And then there's something called non-collateralized. We talked about BitShares. Rob and I were talking about BitShares there briefly. There's also one called Basis. I think Basis did an ICO last year or 2 years ago. Well, yeah, that's my point. I think they raised something like 50 to 100 million, and then they basically shut down a few months ago and gave it all back. I don't know if they couldn't figure out how to make it work, or they were afraid of the SEC or what. Yeah, rightfully so. So with algorithmic stablecoin, and I'm not an expert on how they're supposed to work, but the idea is it controls the supply of the tokens, so that if you've got I don't know what Basis's token was called, so you've got one algorithmic stablecoin. If the value is over $1, I think they increase the supply to try to bring that down. And if the value falls below $1, it tries to buy up supply. I think people have shown there's issues with that, but I don't know of a working algorithmic stablecoin out there today. So I'm not going to say they don't work. I'm not an expert on it, but I haven't seen anyone that's actually done that. And I think BitShares was kind of like that, in that it was something called I'm going to pronounce this wrong, like a signerage or something. Has anyone ever? Seniorage.
It's more like a contract for difference. So
Okay.
imagine the CDP thing, but rather than the keepers, that mechanism is happening automatically. And the publishers of the feed, this has a feed mechanism similar. Those were the actual block producers or witnesses of the BitShares.
Okay.
So it was like, I like in bit assets because they had the zero and they had different feeds
Mm-hmm.
to their real death knell was the lack of liquidity.
Right.
Guys pushed through with that, as we've seen. The liquidity is massive. So I'm impressed because they actually have 90 million. And I think bit assets as a total may have hit a few million.
Okay.
Across all of them hit yet. And bit yuan, the Chinese dollar, that was actually the most popular.
Yeah.
Popular than bit USD. But they still only got to like maybe $2 million US dollars worth of stable coin. Yeah, it was 5 years ago.
Yeah, I think I kind of remember hearing about it.
Too. It's
Yeah.
just not very, there's no market penetration
Yep.
compared to that.
Yeah, so that's a good point to move on. Talk a little bit more about Maker and the governance of the system. The system's design and incentives of the tokens are aligned to try to encourage the growth of DAI. Basically, you need that liquidity. You need everyone that's involved in Maker as a holder or working projects is focused on we need DAI to grow. I mean, 100 million is cool, but it's not like Tether's got 2 billion, right? And we don't even know, no one knows backed by dollars, right? So Maker's doing a lot of stuff right, but there's still it's so small compared to what it needs to be. And so there's a governance token. There's 1 million Maker tokens. There was no ICO, so the Maker Foundation essentially has, as they were starting up, they sold tokens to private investors to raise capital to build the system. I think the development fund still has something like 20, don't quote me on this, but I think 20% of those tokens are still in the development fund. So I think today or yesterday I heard an article about there was, I think like a hedge fund in Canada that just bought like $1 million worth of Maker tokens from the foundation the other day. I forget. It's not. I think I can't remember what they're called. It's ETH something. But so there's only 1 million in existence. They haven't really promoted the token on a lot of exchanges. So really the place where you went to get it was a decentralized exchange called Oasis that Maker Foundation had built. That actually just went away recently. But as David knows, there's lots of different DEXs out there. And if you're looking for Maker, you can get it on Uniswap or a bunch of other. Yeah, right. So total. There you go. Right. So we didn't talk about, we talked about the stability fee, but we didn't actually talk about how you pay for it. So when you've got a CDP today, when you want to pull your collateral out, you have to pay off a portion of the debt. If you want to get all your collateral back, you have to pay off the whole debt. So when you pay that stability fee back, you have to actually pay it in the Maker token. And so those 1 million Maker tokens over time, you're going to actually see probably deflation where people are basically using those to pay back their stability fees and then they get burnt. So today there's actually less than a million Maker available because people have been using CDPs for the last year, and something like I think like 500 Maker have been burnt or something like that.
So they buy it at the open market on the repayment?
Yeah. So
that's all handled for the user, right?
So it used to be you had to go off and buy your own Maker. Today, what you can do is when you're paying back a CDP, you actually have the option. You can pay it back in DAI or Maker. If you pay it back in DAI, the system will go off and get Maker automatically for you to pay it back. So it's like a user experience thing. If you have DAI to pay back your CDP, you can just use a little extra DAI to pay for the fee. But the system ultimately converts it to Maker and then burns that Maker. And so that's kind of interesting. That speaks to the incentives of being a Maker holder in that the more people that lock up collateral to create DAI, the more DAI there is. The more DAI there is, the more stability fees get charged. The more stability fees that get charged, the more essentially the more Maker gets burnt, right? So it incentivizes you as a Maker holder. You want DAI to grow because that will, in theory, make your Maker more valuable. Now, we could debate whether or not that's the case. The reality is that if the value of Maker goes up, then it costs, like less Maker gets burnt, right? So it's not necessarily like a linear kind of like the more DAI, Maker goes up into the right with, the hockey stick. But in theory, there is an incentive that, that is going to add value to your governance tokens if more people are using DAI. So that's kind of the theory behind it. I've got a couple more slides here. I am gonna go back to something that I think Rob was asking about earlier about what happens if the peg breaks, because I think there is an interesting lever for how that could be handled where everyone is made whole. So I want to get back to that, but that is a little bit more advanced. So I'm going to at least go through the next slides that I have prepared before we go to that. That being said, any other questions so far? Yeah, Nate.
Back when you were talking about, the ETH goes onto the market for a buyer, although it's probably unlikely that there's no buyers step up. Then what?
The price of Maker goes up pretty high. Right, so if there was an interesting blog that someone wrote a few weeks ago about this idea of trying to value the Maker token. And they kind of looked at the extremes being if there was, like, as a Maker holder, you want to be the only person selling Maker because that gives your tokens infinite value, right? So looking at that extreme, one person selling Maker has infinite value to everyone's selling Maker, it has no value. It's obviously something in between that, but it was a pretty in-depth blog that was talking through, naturally there's people that are speculating with Maker, and then there's people that are holding Maker to participate in governance. and then you've got people in between. So I think the nature of the people that are actually holding the Maker token, you've got speculators out there. You've got people that are trying to buy low, sell high. So I think there's probably always going to be at least one person selling Maker.
What were you saying about the keepers?
Yeah. What about the keepers?
If there isn't a keepers for a collateral.
So kind of thinking through that, if there was a CDP and say it had 149% liquidation ratio was hit and there was no keepers, then essentially their collateral would sit there and their their DAO would be backed by 149% collateral instead of 150. So then if it continued to be the case where there's no keeper, it would go down to 100, and then if the collateral fell even lower, it would be under 100%. So yeah, that would be a major issue if there was no keepers.
What if there's no keepers, they can bounce back above 150?
Yep. Yeah, and so the extreme case I gave about CDP number 3228, look it up, it's pretty cool. There's actually a Twitter account that just follows that CDP. Yeah, so what happened was the price feeds hadn't caught up with the price in time to where, he literally was like 2 cents under and had, I think it was like 3.5 million DAI on the line, and he managed to pay it off before the price updated in the system. So he was fine. He didn't get hit with the 13% penalty again because he had already been liquidated once.
It would also theoretically then be possible for him to not have done anything, the price crawled back up, and if they put a no harm, no foul.
Yeah, and that's essentially what happened. Is he was on the Maker chat. He's like, guys, I don't have anything else I can sell. Like we could see his accounts on the blockchain. He's like, I sold all my Maker. I got no more ETH. Like I give up, and the price rose. Like there's some angel out there like watching it over that guy. Well, so the interesting thing is, because it is a permissionless system, is so now there's actually a site that sprung up where, like, if you're a do-gooder, like you can pay off someone else's CDP. Like you can do that for free, or there's a site where they will let you buy insurance. So they'll actually pay your CDP off for you, and then like just charge you a fee or something, like if you've signed up. Okay. Yeah. So.
Most people put in 300% early.
Yeah. Right.
And if it's that way, you're paying a little extra. So if the fee's 3.5%, you pay a little more money.
Make your guy insurance.
Yeah. They actually, I saw a really cool slide today. There is a whole like micro ecosystem built, building around Maker. So like, if you like, look at like the layers. Like, you could be a blockchain nerd, you could be a Ethereum nerd, you could be a Maker nerd. Like and now there's projects building on top of that, right? So it's kind of it's cool. And I'll kind of just I'll tease you guys too. So what I'm talking about, like using ETH as collateral, this is actually the beta version of the system. The next version is all about having multiple types of collateral, more than just ETH. So I'll talk about that at the end. But I'm talking about what's out there today, live, and it's been working for the last year or so. So I mean, everyone here used dollars before. Like, what's an electronic U.S. dollar good for? I mean, there's all sorts of projects in lending, remittances, payments, supply chain. There's a really big supply chain company that Maker partnered with a year or so ago. If you run like a shipping company, maybe some of you know there's a bunch of like local trucking companies here in right. I've talked to you before. Like cash flow can get tight. I mean, you've got gas costs, you've got truck costs, like you have real business costs, payroll. And, you're waiting 30 days or 60 days for those receivables to come in. I ran a business. I know a bit about that. Like cash flow can be really tight. Supply chain and logistics industry, and so. Typically, what a lot of smaller businesses will do is they will take that receivable that they haven't been paid for yet. They'll sell it to companies that buy those kind of things, and they'll get like 90 cents on the dollar or 80 cents. I don't even know what it is. Like, yeah, it probably is more like 6 cents, right? It's really, really bad. Like you're paying 40% to get money today, like that's really rough. So the cool thing is that Maker's working with a company that facilitates some of those types of transactions, and they're trying to find ways to undercut that, right? So if you can get paid in DAI and then use your DAI on the open market to pay your employees or whatever, like obviously we're really early, but the idea is if you can get dollars faster because of blockchain and Maker, like that's really interesting how that could disrupt that world. The same way that like Bitcoin helped disrupt, Western Union. Like Western Union is still around today, but like they're taking a notice to blockchain. There's people. David says no, but it's different. Yeah. We'll see how that pans out in the next 5-10 years.
Western Union is like they're way bigger in terms of the market.
Right.
And the markets that they do really well in are the only license, like the M-Pesa and all that.
Right.
They're very involved with the government. Like the opposite.
Yeah. Well, so I'm not talking about Bitcoin. I'm talking about DAI. Right. Right. So. Yeah.
Most of the people opening up CDPs are doing so to take additional leverage on the underlying collateral.
Yeah. Absolutely.
The majority of those trades.
People that are long ETH are opening up CDPs, so they're using it. They're using it for leverage. You hear the.
Best and worst trades are doing that.
Yeah, absolutely. There's stories of people like taking out a loan to buy a car or a house and stuff, and then they did that when ETH was at like $700, right? So, I mean, I know someone like he was the guy that bought a car, using a CDP, and like he lost a lot of his collateral, right? Yeah. So yeah, like to get deeper into the like crypto economics of it, yeah, what you are is you're creating leverage.
Yeah, it's awesome in a bull market. That's when that bull market started. I was playing around with BitShares and did a similar position.
Yep.
It's like, wow. And then
Yep.
when BitUSD first came out, I did the same thing. BitShares went from 6 cents to a half cent.
Yep.
Oh. So you learn the hard way.
Hey, we all have, man. We've all learned the hard way. Yeah, so the interesting thing about that, though, is like a lot of the critics of this system before it was launched were like, well, what happens if crypto dies, right? And yeah, like anyone who's been in crypto long enough has lived through crypto dying. Like this is not the first time, right? So we've got Ether lost over 90% at its worst point last year or earlier this year, right? DAI survived, right? Now I'm saying like last week, like 95 or 96 cents on the dollar. Yeah, like that got scary for Maker. But the reality is like DAI survived an over 90% drop in the underlying collateral. We were all afraid of that. So it turns out so like Ether, like that was a couple months ago where Ether had its low, right? So why last week? So it turns out what we should have been afraid of is what happens when ETH is doing well. Because now people want to create a lot of fucking DAI and leverage their ETH, right? And so there's $93 million worth of DAI, but there's not demand for $93 million worth of DAI. So what you get is if you want to get rid of DAI, your peg's going too low, right? So it turns out what we learned in the last couple of weeks is actually what we got to be afraid of is the value of ETH going up too quickly, like before DAI and Maker can adjust to it. So like it's kind of interesting. It's really interesting actually, if you think about it. So I'll say really quick about functions. So one of the cool things though is that because now we have DAI stablecoin that's decentralized on Ether or Ethereum. So now other projects, if you ever heard of Augur, which is a prediction market system that allows people to place bet, basically create prediction markets on events. You have a lot of risk when you make a bet in ETH because the value of ETH could go up and down while you're waiting for that market to resolve. So the next version of Augur is building off of DAI so that you can place a bet in essentially DAI or USD, and then you're not exposed to necessarily that volatility of the underlying collateral. So it's kind of cool, like projects are starting to use DAI and Maker in the things they do. All right, so we'll talk a little bit about what's a more durable stablecoin. So we've talked a lot about collateralization and being over-collateralized. That's really important to DAI. What we haven't talked a lot about is multi-collateral. So the version of Maker that's on mainnet right now is called single collateral DAI. It only allows you to lock up Ether. Like it's cool it survived a 90% collapse in the value of Ether, but what if Ether doubles tomorrow, right? Like we don't know. That's the point. Like so, there's risk to it.
Go over that scenario again.
Oh yeah. So if the price of Ether is going up, people want to lock. CDP owners want to lock it away and create more DAI to buy more Ether, right? So you're going to have more people producing. You're going to have an increase in supply of DAI without an increase in demand necessarily. So if you've got a higher supply, lower demand, people that want to sell DAI will sell it at a lower price. Right. And so that's what's been happening. Yeah. So there's market makers that hold DAI today, and there's weekly video conferences anyone can join. No, it's not. Yeah. So if there's enough demand, if there's enough demand, if you see 95-cent DAI, it makes a lot of sense to buy it 95 cents because you know it's going to go back to $1. Yeah. Well, and we'll get to maybe why you could be more certain of that at the end of this presentation. But I would say like if there's enough demand, people will buy it at 95 cents because it's worth $1, right? So the fact that people weren't doing that means there wasn't enough demand.
So it's going to be that when it launched, what price did you?
I don't.
December 17th, $1,200.
Yeah, I mean we were near peak. We were near peak. I think it was like $900 in December, but yeah. Right.
But bid ask has proven that out in a smaller, and actually more risky scenarios. There's less liquidity. And USD actually had a black swan sometime over the last 6 months in the market. So there has been similar examples of failure, which hopefully DAI won't suffer from. Are you familiar with Steam dollars as a stablecoin?
A little bit, not very well though.
It doesn't have collateral, but it has a conversion.
Okay.
And to the point of like the incentives around if it's undervalued or overvalued, I've seen Steam dollars at 70 something cents, which people bought up because hey, I'm buying $1 for 70 cents. If you can convert it for $1 worth of Steam.
And it works. It works till it doesn't.
It pumped to $11. So everyone was like, holy crap, my Steam dollars are worth $11. There's like literally no reason not to. And it stayed at like $5, $6 for the longest time. So everyone was posting on Steam and getting like $20, 20 Steam dollars for the post.
Wow.
$200. It's crazy. Those were the glory days.
Yeah. They'll be back, man. They'll be back. So the idea of multi-collateral is like, so right now the issues with cryptocurrencies is like the markets basically like they're fairly correlated, right? Like Bitcoin goes down, Ether goes down, EOS goes down. Like the whole crypto market experienced a bear market last year and is currently still experiencing one, I think. And so the issue is like as Maker's looking to launch its next version, which is called Maker token holders will be considering what are other collateral types besides Ether that would make sense to allow into the system to back DAI. And so that's not been totally defined yet, but some of the things people are looking at are things like there's a project called Digix that actually is pretty old. They launched on Ethereum last year. Digix is focused on they created a gold token. So if you have 1 DGX, it's equivalent to like 1 ounce of gold that's physically in a vault in Singapore or Canada. Without going too deep into how Digix works, the idea is they have quarterly audits and they have testing documentation, shipping receipts that are from different vendors that get uploaded to IFS, so that every digit token which is minted, you can essentially trace back to an actual physical serial numbered photographed piece of gold in a vault. Whether or not you believe in that and how decentralized it is or isn't, that's a different presentation. But I would use DGX as an example of, all right, what if we use gold as collateral? Because gold markets don't necessarily move the same way as crypto markets. Although I will say, if you stare at the charts, you can see some fractals in gold over the last 7 years and cryptocurrencies over the last like 12, 15 months. It's kind of an interesting thing. I'll leave it to you if you're interested to look at. But multi-collateral DAI really is focused on, all right, how do we get past just using ETH as collateral, and how do we make sure we have a more robust system so that we're not always looking at trying to react to what the price of Ether is doing. Yeah, so that's an interesting thing. Like, what if we used NFT that's tied to some other crypto asset or smart contract? Or what if it represents something in the physical world, like the mortgage on a commercial piece of real estate? Or what if you had a security token, right? So I'm working in investment banking right now. There's talk about these things. Like, it's not happening tomorrow, but if we look out 5, 10 years, like, will there be like security tokens out there or other types of things in the blockchain that you can use as collateral, right? So Maker's really focused on the current system is a beta, and multi-collateral DAI is really kind of like the next iteration that's really kind of the start of the system. So we're not, like, it's still very early days, but yeah. Question.
Do you know if the Maker team is, I assume the first iteration of multi-collateral DAI are assets specifically on Ethereum. Are they extrapolating out their roadmap to the point that they're attempting to put multiple native blockchain assets underneath the basket, basically?
So the
like an IEC mechanism.
So great question. So the interesting thing that happened over the last couple months is we actually have something called WBTC, or wrapped Bitcoin, that's on Ethereum now, right? So there's like, it's really low. Like, I think there's 100, I haven't checked recently, but there's like 100 Bitcoin worth of like wrapped Bitcoin out there. So I would say it's not totally decentralized, not totally trustless, right? So you'd have to analyze that for whether or not you believe in WBTC and if the value is accurate. But the reality is, like, what if we allowed people to take their wrapped Bitcoin and use that as collateral? Like, I personally think that sounds like a really good idea, because, like, I got into this thing through Bitcoin. I'm not a big Bitcoin fan these days. Like, the community kind of turned me off, and I'm way more interested in stuff like this. But, like, I'm not against Bitcoin either. Like, I hold one, maybe one Bitcoin, a little less than one Bitcoin now. And I don't think Bitcoin's going, like, it's over 10 years old, right? So I think that could be some great collateral for creating DAI.
I'm interested in seeing a basket that's collateralized between like Zcash, Bitcoin, like a basket of cryptocurrencies. I think would be amazing. I know there's huge hurdles.
Yep.
It'd be cool if DAI was putting effort into helping them bridge the chains. So I think in like 5 years we'll see that.
Yeah, I think so. I think so. Yep. Not to be confused with Hyperledger Fabric. Yeah, Daniel.
As far as the timeline goes, is that as far as the timeline is?
So I changed the slide. It said it said MCD 2019 Q1, and I was like, oh, we got 2 weeks left. I'm just gonna take it upon myself to change that date. I'll tell you, so a little bit about the timeline is we're probably about 1 to 2 months out, last I read. The multi-collateral DAI code is out there on GitHub, and it has been verified, which makes it interesting. If you've ever heard of, I won't go into a talk on building the space shuttle, right? Like, it's not foolproof, but if you're running mission critical, like, rocket kind of system, you formally verify that if you designed it to do A, it does A and not B, right? And so there's a whole field of research on verification. and there aren't very many projects that have been able, blockchain projects that are formally verified. So MCD is formally verified and it's on GitHub today. So that's really, really cool when we're looking at something like this.
Separate body is to like verify.
Yep.
Yeah, there's programs that actually allow you to
Yep.
prove the correctness of the algorithm.
Yep.
Which means the mathematics proof that it's above proof, basically, or it works.
Yeah, yeah, that's right, yeah.
If the design's wrong.
It works the way it's designed, right. If the design's wrong,
Chloe might be working on right now.
yeah, I mean, if you've got a bad O-ring, you know, your shit blows up, so. Well, yeah, that's a good example too. Yeah, I'm sure they probably formally verified a lot of the Boeing stuff too. So, yeah, multi-collateral DAI is like a lot more complex. It's a total rewrite, and it's really necessary, I think, to grow this thing because, I mean, right now, if you look at, what is it, kind of all Ether blocks in Maker right now, much more than it starts to become a systemic risk to the Ethereum blockchain and project, right? Like, we don't want another DAO debacle from 2 years ago if you've ever heard of that, and if you haven't, you can ask me afterward. Well, no, like assessment, like hacker that, and now blockchain's exposed to a hacker holding a large amount of the underlying collateral that makes that blockchain run, you may have an issue. So I don't think that would happen, but yeah, like you need to worry about that. Oh, yeah, so I talked a little earlier about logistics and like trucking companies that will sell their invoices, right? So essentially, you could create an NFT or token that represents that invoice and use that as collateral with the Maker system, right? Like, it doesn't work that way today, but in theory, like, if people wanted to do that and Maker holders voted to allow that collateral type, why can't you use, like, some shipping company's invoices, right? Like, probably not UPS, but, you know, maybe not the guy down the street either. I don't know. Like, I don't know, we'll see. So MCD improvements, we talked about collateral types. The way that the price feed oracles work today are kind of like the beta version. I know Dave is going to ask me how it works in the next version. I don't know. I haven't studied how the price oracles change. But I think the foundation knows, like, the way they work today is probably not the best ideal way. So they're beta. That's going to change. Maker governance, I'm not sure how that changes in MCD that is live today. And then liquidation auctions, so the way that liquidations happen, I think also changes. Unfortunately, it's a little deeper than I know right now. And then we talked about Eurodai, NDAI, and synthetic DAI, and all sorts of interesting things you can peg. So that could be in the future out past the launch of multi-collateral DAI. That's what I got for tonight. So if you're interested in connecting with me, I love crypto Twitter. That's my handle. If you're interested in Maker, I'm happy to stick around and talk more about the project with you guys. But the Reddit's semi-active, the chat's pretty active, and then follow Maker on Twitter. All sorts of interesting things happen. Once in a while, they might retweet me, which is cool. So, that's all I got. Any questions?